Welcome back to the Malaysia Money Matters show. It's the 15th, April 25.
Good to be back.
Today, we've got a stack of financial news, quite a mix, actually, stuff happening here in Malaysia, and some big moves on the global scene, too.
Yeah, lots to unpack. Trade wars, IPOs, company disputes. It's all in there.
Exactly. So let's dive right in, maybe kick off with what's happening with companies closer to home.
Sounds like a plan. Where do we start?
How about Able Global, the Malaysian Anti-Corruption Commission investigation into the company, and the CEO, Edward Goh, that's concluded. No
Well,
prosecution.
Right. That follows the earlier news about their executive chairman, Keng, who's a major shareholder. He was remanded and charged. That's still ongoing, correct?
That's my understanding, yes. And interestingly, their stock, it's down quite a bit this year, like 27%.
Right.
But it got a small bump today on this news.
It's interesting, isn't it? Maybe the market sees the no prosecution for the company itself and the CEO as,
Yeah.
well, maybe removing some immediate uncertainty.
Could be like maybe the operational risk feels lower now.
Possibly. But, the chairman issue, that's still out there. A primary shareholder facing charges is, well, it's not insignificant. Investors will definitely be watching that.
Fair point. It separates the company's immediate situation from the leadership cloud, perhaps?
Sort of. It highlights how the market tries to price different kinds of risks, I suppose.
Okay, next up. Cahya Mata Sarawak. They're still waiting for the Sarawak government to give the nod for their second clinker production line.
Ah, yes, the cement component. Doubling their output, potentially.
That's the plan. Would make them the biggest producer over in Borneo, apparently.
Big ambitions. But they also have that ongoing legal fight, right, with the deputy chairman, Datuk Seri Mahmud Abu Bekir Taib.
Yeah, allegations of breaches of trust. That's still simmering.
And yet, their share price jumped today, quite significantly.
It did. Which seems counterintuitive, maybe, with the legal stuff.
Well, sometimes the market gets really focused on the future. That potential for doubling capacity, becoming the dominant player. Maybe that's outweighing the current legal headaches in investors' minds.
So future growth prospects trumping present problems.
It can happen, yeah. Shows how powerful that growth narrative can be for sentiment.
Makes sense. Now, let's talk about companies looking to go public. Hock Soon Capital, they're the poultry folks. QPlus Eggs.
Right, I know the brand.
They're planning an IPO on the main market.
Okay, raising funds for expansion, presumably.
Exactly. A new farm in Teluk Intan. They reckon it'll significantly boost their egg production capacity.
And their financials look okay? Revenue, profit?
Reportedly growing, yeah. And they've even mentioned paying dividends down the line.
Could be an interesting one for listeners looking at, say, local food producers. A way to invest in that sector.
Definitely one to watch. Then there's Polymer Link Holdings, different sector, plastic powder manufacturing.
Okay. What's their plan?
Also an IPO, but on the ACE market, so for smaller emerging companies.
Right, and the funds.
They're looking at expanding into Australia, paying down some debt, and just general working capital.
Australia, interesting. Moving beyond the domestic market.
Yeah, and they've apparently shown consistent profitability, too.
So, another example of a Malaysian company looking to grow, tapping the markets. Shows the diversity, right? Poultry, plastic powder.
Exactly. Now, a less positive story. Mujajaya versus Binapuri.
Ah, the property development dispute.
That's the one. Wisma Mujajaya has filed to wind up Binapuri, says they haven't paid RM30 million awarded by the court from a joint venture.
Ouch. RM30 million is serious money. What's Binapuri saying?
They're appealing. Their argument is that the original agreement wasn't a JV thing, but more like an unlicensed money lending transaction.
Wow, okay. That really complicates things. Definitely highlights the risks in property development JVs. Big potential for disputes.
And this one looks like it could drag on, especially with the appeal. Lots of uncertainty there.
For sure.
Shifting gears a bit, renewable energy, Gentile use sustainables.
Okay. What's happening there?
Their subsidiary just signed a massive power purchase agreement, a PPA, with Sabah Electricity.
How massive?
40 years. For a 162-megawatt hydropower project in Sabah.
Wow, 40 years. That's long-term stability. And 162 megawatts is pretty substantial for hydro.
It's a RM 2.8 billion project, expected to bring in significant annual revenue.
Huge deal. And good for Sabah's energy mix, too.
And get this, they're apparently looking into maybe manufacturing the turbines locally as well.
Really? That would be a big boost for Sabah's economy, wouldn't it? Jobs, tech transfer.
Potentially, yeah. So a big move towards sustainable energy, long-term revenue, and maybe some local economic benefits, too. Seems quite positive.
It's definitely a significant development, fitting into that whole global sustainability push.
Now, not all news is good news, of course. Reach Energy.
Facing suspension. Delisting, maybe.
Looks like it. Bursa Malaysia rejected their request for a third extension to submit their regularization plan.
Third time. Yeah, that's usually not a good sign. They've been loss-making for a while, haven't they?
For quite some time, yes.
Yeah.
So this just shows the pressure companies are under to meet listing requirements and, well, turn things around financially.
It's the reality of the market. You need a viable plan.
And in a similar boat, maybe slightly earlier stage, is TXCD.
What's their status?
They've just applied for a second extension for their regularization plan. So also facing challenges, trying to buy more time.
Right. Another one struggling to resolve financial issues. Shows it's not just Reach Energy.
Then there's OCI Holdings. They had plans for an IPO for their Malaysian polysilicon business.
Polysilicon. Used in solar panels and electronics.
Exactly. But those IPO plans are now on pause.
Why's that? Market conditions.
Pretty much. Global stock market volatility, worries about tariffs. Plus, apparently the whole polysilicon industry is facing oversupply issues right now.
A combination of factors then. Macro environment and industry-specific headwinds.
Yeah, it really shows how global stuff, market jitters, trade policy, supply gluts can directly hit local plans, even an IPO.
Definitely interconnected.
But despite OCI pausing and Cuckoo International also reportedly delaying, Bursa Malaysia is still saying they're aiming for 60 listings this year.
60. Still, that seems ambitious, given the current climate.
It does, but they say several companies are still scheduled to list soon.
Okay, so maybe there's still some underlying confidence or a strong pipeline despite the headwinds. Interesting.
One last local item. Pestec International. They tried to block an arbitration process.
Related to?
A guarantee for a subcontract on that big Johor-Bahru rail project.
The double tracking project. Who are they in dispute with?
YTL Construction. And Pestec's attempt to block the arbitration failed.
So the legal battle continues.
Yeah.
Just shows, even on these massive infrastructure projects, disputes can pop up.
Absolutely. Complex contracts, lots of moving parts.
Okay, that covers a lot of ground locally. Ready to look internationally.
Let's do it. What's catching your eye on the global front?
Well, starting in Asia, those dollar bonds,
Yeah.
they're having a rough time. Worst losses since the pandemic started, apparently.
Why is that? Trade war jitters.
Pretty much. Concerns about the credit risk of regional borrowers, especially with President Trump's tariffs escalating things. People are worried about their ability to repay dollar debt if trade gets hit hard.
Makes sense. But I saw they've actually still outperformed U.S. and European bonds this year. How does that work?
Yeah, apparently due to having shorter maturities, on average, and relatively benign inflation in the region. So less sensitive to interest rate changes, perhaps, but more sensitive to this immediate trade risk.
Interesting nuance. Shows how trade policy hits financial markets directly.
Yeah. And speaking of trade wars, Ray Dalio has some pretty strong views.
The billionaire investor, what's he saying?
He thinks the U.S. is, quote, very close to a recession.
Wow. Because of?
The trade war, primarily. But also U.S. debt levels, the budget deficit, general global political tensions. He sees the tariffs as really messing up the whole production system.
No, he doesn't. He's pointing to a whole bunch of factors coming together, potentially creating a perfect storm.
Okay, so Dalio's very bearish on the U.S. What about the big banks? Citigroup?
Citi is also becoming less positive on U.S. stocks. They've lowered their view, suggesting investors diversify.
Their reasoning, they think that period of U.S. exceptionalism might be fading. Plus, trade tensions are hitting U.S. companies harder now, and U.S. stock valuations look expensive.
So spread your bets, basically. What about other regions?
They've actually downgraded emerging markets, too, expecting China to get hit disproportionately by tariffs. But they're still positive on Japan and Europe.
Interesting. So a shift away from the U.S. and EM towards Japan and Europe, in their view, a clear strategic call.
Provides a definite perspective on potential shifts in global investment flows.
But there's always another side, right? What's the view from the White House?
Yeah, quite different. Kevin Hassett, the NEC director, strongly disagrees with recession predictions.
What's his argument?
He points to strong U.S. jobs numbers, says he's getting positive feedback from CEOs who are apparently shifting production back to the U.S. onshoring, and he claims lots of good trade deals are in the works.
Okay, so a much rosier picture from the administration. Two very different narratives about the U.S. economy.
Exactly. Highlights the uncertainty, really. Depends who you ask and what data you focus on. Important for our listeners to hear both sides.
Absolutely. Now, something interesting. Gold. Both Goldman Sachs and UBS are sounding pretty bullish.
Very bullish, expecting prices to rise significantly.
Why this sudden optimism? Or maybe not sudden, but renewed optimism.
Couple of key reasons. Strong demand from central banks, they're buying a lot. And gold's traditional role as a safe haven, right? A hedge against recession fears and geopolitical risk.
Which we seem to have plenty of right now.
Precisely. Goldman's even talking about gold potentially hitting US $4,000 an ounce by mid-2026.
4,000, that's a huge call. Shows a level of anxiety maybe simmering beneath the surface.
It suggests a real search for safety, yeah. A shift towards defensive assets.
And the IMF seems to be echoing some of these concerns.
Yes, the International Monetary Fund is warning that these big geopolitical risks, including the trade tensions, could absolutely trigger large stock market corrections.
Increasing volatility, threatening financial stability.
That's their worry. Their research apparently shows these kinds of events usually lead to monthly stock price drops. It underlines this systemic risk. These aren't just isolated spats. They can shake the whole system.
Right. And sticking with trade and tech, President Trump said he'll reveal the tariff rate on imported semiconductors soon.
Yeah, suggesting those recent exemptions for some electronics might just be temporary.
And the goal is still explicitly to bring chip manufacturing back to the U.S.
That's what he emphasized. So the focus on the tech sector and trade policy is definitely continuing. Big implications for the global supply chain there.
And China's not just sitting back, right? They've made some moves too.
They have. Revised their rules on figuring out the origin of imported chips, and also put new export restrictions on rare earth materials.
Rare earths. Critical for lots of tech, so China's using its leverage too.
Looks like it. Adjusting their own rules.
Yeah.
Potentially impacting supply chains. It's part of that strategic response to the shifting trade landscape. Tit for tat, almost.
Okay, so we see these policies, warnings. How is actual money moving? Foreign investment flows in Asia.
The trend seems to be outflows. Foreign investors pulling money out of most Asian markets.
Any particular hotspots?
South Korea and India saw significant outflows, partly blamed on the U.S. tariff policies.
Any exceptions?
Taiwan actually saw net inflows. But that was apparently linked to some local rules restricting short selling.
Ah, a specific market factor there. And Malaysia.
Unfortunately, Malaysia recorded its 25th straight week of net foreign outflows from Bursa Malaysia. 25 weeks. That's quite a sustained trend. Reflects that caution we were talking about.
Yeah, a clear picture of capital reacting to uncertainty.
Definitely.
And finally, on the international front, oil markets. How are they reacting to all this?
It's a mixed bag. Prices edged up a bit recently.
Why was that?
Partly those U.S. tariff exemptions we mentioned, and also Chinese crude imports bounced back a bit. Some short-term positives.
There's usually a but.
But the gains were limited. Because overriding all that is the worry about the U.S.-China trade war hitting global economic growth. Slower growth means less demand for fuel, right?
Logically, yes.
And reflecting that, both Goldman Sachs and OPEC have actually lowered their oil demand forecasts for the next few years, specifically citing the trade war's impact.
So the big players are seeing less demand ahead.
Seems so. And OPEC also noted that some of its own members are actually producing more oil, despite the agreed production cuts. So supply might be creeping up while demand forecasts are heading down.
Not exactly a recipe for soaring prices, then. Shows how trade disputes ripple right through commodity markets, too.
Absolutely affects everything.
Okay, so that's the international picture. Let's bring it back home. Malaysian political news, which is obviously tied into all this global economic stuff.
Right. How is Malaysia navigating these choppy waters?
Well, first off, dealing with those U.S. tariffs, Malaysia is preparing to send a delegation to Washington to discuss the 24% reciprocal tariffs the U.S. imposed.
Direct engagement sounds sensible. Any advice being given?
Yeah. AmCham, the American Malaysian Chamber of Commerce, stressed that Malaysia needs to present a really strong business narrative, show the value proposition.
Makes sense. Focus on the economic ties.
And Bursa Malaysia's chairman emphasized staying neutral in the broader dispute, if possible, and really focusing on strengthening trade within ASEAN, bolstering regional ties.
A two-pronged approach. Engage with the U.S., but also hedge bets with regional partners.
Exactly. And Keng Research chipped in, suggesting Malaysia play to its strengths in the talks electronics, semiconductors, those rare earths we mentioned, gloves, even security cooperation. Leverage what we're good at.
So a strategic, multifaceted response seems to be forming. proactive engagement.
It looks that way. But there's also a recognition of the risks. Economists are suggesting Malaysia might need to rely more on domestic demand now.
As a buffer against potentially weaker exports due to trade tensions.
Precisely. Even with the recent temporary tariff reprieves, the overall uncertainty could make businesses hesitate on investment decisions, especially in key sectors like electronics.
That potential investment slowdown is a real risk.
And it's not just local economists. Moody's Analytics has actually lowered its 2025 GDP growth forecast for Malaysia, specifically citing this global trade uncertainty.
Okay, so that brings the potential impact right home. Real consequences for growth prospects.
It does, highlights the vulnerability to these external shocks and maybe the need to stimulate things domestically.
A challenging balancing act.
On a more domestic policy front, though, something potentially positive: the National Gas Roadmap.
Ah, I heard about that being finalized.
Supposedly being finalized, set for launch this year, the goal is to boost the domestic gas value chain.
Especially as Malaysia imports more LNG now, right? Liquefied natural gas.
That's the context. As domestic production, particularly from the peninsula, maybe declines, we need to manage the import side and the whole downstream industry better.
Who's expected to benefit? Petronas, obviously.
Petronas is seen as a key beneficiary, yes, but the broader aim is enhancing the security of gas supply for the whole country and attracting new investment into that value chain.
So a strategic focus on the energy sector, looking ahead. Makes sense given the global energy shifts, too.
Okay. Wow. We've covered a lot of ground. Local companies, global markets, trade wars, policy responses.
It's a complex picture right now, definitely. Lots of moving parts.
So stepping back from all the individual pieces, what stands out to you as maybe the most dynamic story, the one with the biggest potential impact right now?
For me, it really has to be that whole U.S. trade policy situation and just the sheer scale of its ripple effects.
The tariffs, the uncertainty.
Yeah, the back and forth on tariffs, the really quite stark warnings about recession from people like Dalio, contrasted with the administration's view, and then seeing how countries like Malaysia are trying to navigate it all.
It touches everything, doesn't it?
Pretty much. Stock markets, bonds, investment flows, commodity prices like oil, company investment plans, even national GDP forecasts. It's all being influenced by this uncertainty. It feels like the dominant theme right now, creating both risk and maybe some opportunities for those who adapt.
That's a great summary. It really does feel like the central thread connecting a lot of what we discussed today. It's certainly a situation demanding close attention.
Absolutely. Things are changing fast.
And for you, our listeners, keeping up with how these trade discussions evolve, how companies here are reacting, it's really crucial for making sense of your own financial landscape and making informed decisions.
Couldn't agree more. Staying informed is key in times like these.
So if this deep dive today has got you thinking and you want to stay on top of the latest financial news and analysis impacting Malaysia, please do make sure you subscribe to the Malaysia Money Matters podcast.
We'll be here trying to unpack it all as it happens.
We will indeed. Thanks so much for tuning in.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.